Hi, I'm Hubert Centers. Welcome to Absolute Wealth's weekly edition of Centers Strategies. Let's take a look at this week's strategy. In this week's strategy, let's discuss the importance of trading gaps. Now, almost every market out there trades 24 hours a day. There are some exceptions, stock options, stuff like that. But the futures markets and most other currency markets trade about 24 hours a day. But back in the day, we all still traded the time, which was the open, and the pit session, which was a 9:30 open to either a 4 o'clock or 4:15 is when the futures close. So using that information, what you're going to do is, you've obviously seen in the news that, the world is ending, the U.S. economy is in the crapper, and so is Europe. Well, you've had this double bottom, and the market has just been cruising since last October, bottomed again in December, and has now been cruising higher as the world is ending. So how do you deal with that? What do you do? It's really simple. So obviously, if you're not already long in some kind of equity or stock or an index future, you need to get that way, right? But how do you do it? Well, you don't want to just buy these new breakout highs, because this thing acts like a sprinter. It runs, stops, and reverses. Runs, stops, and reverses. So it's a little hard to get a really good entry. So what you do is you're looking for a gap down situation, and the theory on gaps is most gaps fill. So a half a gap fill happens about 82% of the time. A full gap fill happens about 65% of the time. Now, in a massive uptrend that we have like we're in right now, if you have a gap down situation, it's going to fill more often than if you have a gap up situation. So with that information, we're going to change this chart on the ES to an @ES.D. And what we're going to do is we're going to change it also to about a 5-minute chart. And I'm going to show you exactly what I'm talking about. And you can see here in yesterday's chart, you had a gap down situation. I'm going to use my pen just because it jumps out at you a little bit better. So you had a gap down situation. There's your half a gap fill, and then here is your full gap fill. So if you're looking to buy a pullback in this elevated uptrend, then what you want to do is wait for a 9:30 open, and you're looking for a gap down situation. That way you will be buying low and then selling high. Now you can also buy high and sell higher, but on the index futures and on some equities, that's not the best strategy in the world. So remember, you're going to find yourself when you have a really good uptrend, then what you're going to do is you're going to wait for a gap down in that uptrend. You're going to place your entry, place your stop, and then look for your targets to the high side. This will work in the index futures, the Dow, S&P, NASDAQ, and the Russell. It'll also work in anything that trades in those indexes, as long as it's not news related around earnings or something like that. All right. For more great videos just like the one you just watched, just click the link below and get added to our free weekly strategies. Good luck. Hope it helps. I'll see you in next week's strategy.